Short seller Carson Block of Muddy Waters is targeting Burford Capital, the litigation finance market's dominant player. Muddy Waters said in a report on its website last night that Burford overstates the returns it earns on its investments and questioned its financial reporting and governance. The short sent the London-listed company's stock plummeting as much as 64%, wiping $2 billion off Burford's market value. Burford has responded, saying, quote, "Burford has never been contacted by Muddy Waters and has not had any prior sight of its work. We will review the report thoroughly and respond to it as rapidly as possible." Muddy Waters founder Carson Block joins us now exclusively from San Francisco. Carson, explain your case. You talk about a light disclosure regime, the esoteric nature of Burford's business, and unethical behaviour by its largest shareholder, among other reasons why you're short. Just go into some detail for us on these.
Sure. So Burford is a litigation finance company, and what it does is it usually works with plaintiffs who are in high-stakes litigation that costs a lot of money. Burford will provide part or all of the funding for the case, and in exchange, if there are recoveries, then Burford will get a percentage of the recoveries. So on the surface, it's an interesting asset class because it's not correlated to anything else, and it's something that hasn't really been that developed as an industry. So all of those things are true. Now, the issue with Burford really has to do with the state of its business and what its financials show. In our view, Burford is actually precariously positioned. It's a business that's doing fairly poorly, but its financials actually look fantastic. And the reason for that is Burford's accounting is misleading. I mean, misleading is actually an understatement. So that at a high level is why we're short. The point that you addressed or that you brought up about the light disclosure regime, Burford had a £3 billion market cap, and it was still listed on London's AIM market, which is, it's for smaller companies and it's light regulatory burden, it's light disclosure. But by the time you get to be that large, a bona fide mid-cap company, it's not appropriate. And you layer that on top of the fact that their accounting, I mean, they have this, as you said, esoteric asset class. And the type of accounting they employ for that is what's called level 3 fair value accounting. And that's very similar to the kind of the mark-to-model accounting that Enron employed, the legal portion of Enron's accounting. So basically, they're supposed to sit there every period and say, this case we invested in 18 months ago, do we think it's worth more or worth less than it was at that time? How much so? Yes. And it's litigation. You just cannot reliably model these outcomes, yet they told investors they can. And that we were just incredulous of that from first blush.
So Carson, it seems to me that it would be pretty easy to figure out what cases are producing revenue, what cases have been won, for example. It's litigation finance, and as you say, the accounting may be opaque, but you can at least figure out what's winning and what's losing in the courts. So why wouldn't top shareholders, for example, Woodford Investment Management, which is number 2 among the top shareholders, Invesco number 1, you also have AXA, you have Teachers Insurance and Annuity Association of America, some major shareholders, why wouldn't they do their due diligence?
Well, it's interesting because I'm not sure that numbers 1 and 2 of the shareholder list are really there to do due diligence. So number 1 has been Invesco, and portfolio managers there is Mark Barnett. And he's the protege of the number 2 holder, Neil Woodford, who actually used to be at Invesco and made that initial investment for Invesco that really put Burford into business as a public company. And Mark Barnett and Neil Woodford have been criticized for their holdings in companies that have private investments, and specifically how they have at times invested in the private companies underneath the public company, and they've invested in ways that appear to manipulate the marks of those private companies so as to underpin the value of the public company. So the idea being that might take a few $1 million of their investor capital to kind of push a mark up here, but they've got many more millions of dollars in the public company. And that's what we that's what happened here with Burford and Invesco, Mark
Yes.
Barnett. So back in 2011, Burford funded this one litigation called Napo Pharmaceutical, and by 2013, Burford reported that it was concluded and took a significant gain or booked a significant profit on it. But the thing is, it wasn't concluded. It was the following year that it actually reached a jury verdict, but that verdict was a loss for Napo, for Burford's client.
Yep.
But rather than writing this down, in came Mark Barnett to help, in a couple of years later, to help invest in a company that basically paid Burford the money that Burford claimed to be owed. So it was financially engineered. It was not a real litigation recovery, and that helped Burford raise money and push up the value of its stock for several years after they first marked it there.
Carson,
So
good
different
morning.
type of shareholder.
Yeah, okay. Was the trigger for taking the position the Woodford problems? Is that what triggered you to take this?
No, but it's definitely an indicator. We had profitably shorted a company called Prothena a few years ago that was a Woodford holding. But yeah, I mean, you might note that Woodford has, in a way, been very helpful to activist short sellers in helping us find companies that are destined for the rubbish bin. But that's not the sole reason, but it was one of the indicia. But it's a company that, because of the accounting and all those fair value gains, people had talked about for a while, but it was hard to sink your teeth into it until recently.
You talk about this being an industry-wide issue. You talk about it being an esoteric industry. Could you have picked on a number of the companies that are involved in this process? I'm curious as to why you picked on Burford. Is it specific to this company, the problems you're highlighting, or do you think that there are similar problems elsewhere in the industry?
So there are only two publicly traded companies of any size. Burford, which is the largest, and IMF Bentham, which is listed in Australia. Now, they use two totally different types of accounting. So Burford uses this fair value accounting because of how they classify these litigation assets. IMF Bentham does not. You don't see these mark-to-market fluctuations. So when you look at IMF Bentham, it's lumpy. They'll have a good period, and then they'll have some periods that aren't good, and another good period, and they don't trade at a premium. At Burford, every period was great, and it was growing. And to us, it wasn't that Burford's operating its business much better. I mean, if anything, it's growing more quickly than IMF Bentham, and it's just, you know, whenever growth and quality are usually inversely correlated to some extent, to a large extent. So it's really, the difference there was how they were accounting for it, and that's what made us focus on Burford.
Carson, would you be prepared to disclose the size of your short, or if you're covering at this point now that the stock is down, as we see, 66%?
So we make the required disclosures, and there should be filing that hits. Not sure what the FCA's timetable is for that, but those are the disclosures that we make about our short positions. So we obviously manage risk. We did trade around this some because there was some volatility. But yeah, we're obviously happy with how things are turning out so far.
Carson, we have to leave there. Thank you for joining us exclusively on this short. That's Carson Block, Muddy Waters founder. And I want to point out, Burford has responded saying it has never been contacted by Muddy Waters and has not had any prior sight of its work. Quote, "We will review the report thoroughly and respond to it as rapidly as possible."